Hey, Adam Hooksema here from ProjectionHub, and in this video, I'm going to be talking through how to acquire a salon with an SBA loan, and I'm going to be using a real-life client example here. We've anonymized this particular salon here, but this was a client that we worked with to help acquire a salon with an SBA loan was the idea here. I'm going to be walking you through the process here, kind of starting with how much can the business even qualify for. We're going to get into how do you find a lender, what is the process of going through underwriting with a lender, and then ultimately what does that kind of loan closing process look like, and kind of take you through step by step. But first, the most important thing that we usually look at is, hey, how much does this business even qualify for based on the historical financials? And so let me kind of show you how an SBA lender is going to think about this. And I was an SBA lender for 12 years actually, so I closed over 1,500 SBA loans during my time as the executive director of an organization called Bankable. So today we help clients create financial projections, business plans, and walk through the SBA process. So that's just a little bit of my background and why I'm talking about this today. So, all right, let's go ahead and dive into the spreadsheet here that we use to kind of determine, will this even qualify for an SBA loan? So this particular salon, what we start by doing here is getting the historical financial data into a model. And so we've got the last 3 years, and we always use the tax return data. That's what the SBA lender is going to be using. The tax return is the source of truth. And so that is what an SBA underwriter is going to have to use to determine what could this business cash flow historically. So we put in the sales amount from the tax return, all the various expenses, and we come down here to the net income and wow, big negative, big losses. Now there were some add backs in this situation. There's a seller's salary that we could add back that was helped a little bit. There was also kind of a unique situation with the rent. So this business had gotten behind on rent in previous years. And so their rent expense up here, you could see in 2022 is $152,000. Really, that was paying back rent. And so that's why rent actually went down. So we were able to kind of adjust down rent to what it should be, or kind of normalize it for what the annual rent should be with an add back here. That still left us with this negative seller's discretionary earnings. And so what the SBA lender is going to be doing is they're going to look at this estimated cash flow, and they're going to look at, okay, what's the proposed loan amount, and what's the annual debt service for that loan amount? So what would the annual loan payments be for our proposed loan? And so in this case, the seller was asking for $350,000. So right here we see $350,000 amount used for the acquisition here. The SBA loan was penciled in at $360,000 with a $40,000 down payment for a total project of $400,000. And that $400,000 was going to cover the $350,000 to go to the seller, as well as some closing costs, and leaving the business with some cash in the bank as working capital after the acquisition. So with a $360,000 SBA loan at a 10.25% interest rate over a 10-year term, our model calculates out, here's what that proposed annual debt service would be: $57,689 a year in loan payments based on that. Well, we've got, in the most recent year, negative $58,000 in estimated cash flow. So we can't cover our debt service. This business cannot cash flow its debt. And so, this was the first kind of initial analysis that we did, and we had to tell the potential buyer we are working with, hey, this isn't going to qualify for an SBA loan. And then they came back and said, well, actually, there's some cash sales that aren't showing up on the tax return. Okay, well, we can consider that, but the SBA lender is not going to, they're going to use the tax return. Whatever is on the tax return is the source of truth. And so if your seller is cheating on their taxes and not reporting their cash sales, and if it doesn't cash flow for an SBA loan, you can't just say, well, there's some cash sales and it actually does cash flow. That's not going to fly. Now, you could have a scenario where you say, okay, we're going to do this. We're going to buy this business anyway. We're going to do it all on seller financing, meaning the seller's you're going to pay the seller over time. You're not going to use SBA. So that might be a situation for a deal like this where you might not be able to use SBA. But I did want to show you, in this situation, the buyer was saying, yeah, actually sales were something more like 650,000. So let's just say they reported accurately. And so we had 650,000 of sales. That would leave you with 101,000 of estimated cash flow in 2024 with 57,000 of debt service. That gives you a 1.77 debt service coverage ratio. So this is the important number that you're going to need to know. So hopefully the deal that you're looking at has reported all their sales and is profitable and is cash flowing. And so what you're trying to solve for here is you want to, the most you're going to be able to borrow is probably a loan amount that causes that debt service coverage ratio to be 1.25 or above. So that means you should have $1.25 here, $1.25 of estimated cash flow for every dollar of proposed annual debt service. And so at 1.77, you're actually in good shape. You probably could, this business, if it had reported all of its sales, could actually have qualified for a $360,000 SBA loan. So that is the process that we're going through, is getting the historical financials in there, trying to see if, hey, did this historically cash flow at 1.25 or above? If it did with that proposed loan, you're probably in good shape to kind of move on. It kind of passes the first threshold from an SBA perspective. And so next step is, finding a good SBA lender. So let me show you a tool that we've got to show you how to do that. Okay, so we have taken all the publicly available SBA loan data and put it into this little dashboard tool here that you can sort and filter in a bunch of different ways. And so this particular salon, I believe, was in California. So we can first sort by California and we see, okay, US Bank, Wells Fargo, JP Morgan. These are the top SBA lenders in the state of California over the last 5 years, roughly. Then we're going to sort by business age because this is for an acquisition. And so we want to select change of ownership. Select change of ownership. And so this is just for acquisitions of businesses in California. And we see Live Oak Banking Company, by far the top SBA lender in the state of California for acquisitions. And Live Oak Bank is known as a top acquisition lender kind of across the country. So, but you obviously could use this tool and sort in your own state and take a look at that as well. So I will put a link in the description of the video below to this SBA lender finder tool. We offer it for free. And so, as you get into it, you can sort and filter and find hopefully a good list of lenders that might be a good fit for you. The one downside of this tool is that it really just gives you a list of banks to try to reach out to, but how do you know who to reach out to? We don't have a list of individual people or contact information at every single bank. And so one thing that we offer here is a free SBA review. And so here you could click this free SBA review button. There's a little form here that you can fill out. Give me a little bit of context about your deal and situation. And then I can do a little bit more digging, give you some direct individualized feedback with a video response, and try to point out a lender who I think could be a good fit, and hopefully give you an actual person's name that I think could be a good fit as well, and help you through that process. So yeah, that's kind of the next step in the process. So once you have identified a lender or a couple lenders that you want to apply with, the thing that you need to be asking those lenders for is a term sheet. You want to ask the lender to issue a term sheet. What they're going to do is they're going to ask for the business that you're buying. They're going to want the last 3 years of tax returns and the year-to-date financial statements. They're going to want your resume, your personal tax returns, your personal financial statement. They're trying to determine whether you as the buyer are a good fit to buy this business and whether you're qualified. They'll take those things and kind of package them together. And if those look good, then the lender will issue a term sheet that says, yeah, we think we can land up to, $360,000 on this deal. And it's not an official approval. It hasn't gone through underwriting yet. But what that does is gives you some confidence that, hey, I've got a lender lined up here that thinks that they could get an approval on this deal. And at that point, you'll want to go lock down the deal with a letter of intent signed by the seller. And these two steps could sometimes be reversed. Sometimes you want to try to lock down the deal with a letter of intent from the seller first, and then go get a term sheet from a lender. It really depends on if you're worried about getting an offer to the seller really quickly before you get any lender feedback. I've seen sometimes where, while we're trying to get a term sheet from a lender, somebody else comes in and swoops in and buys the business or gets under LOI with the seller. So it could be beneficial to get the business under LOI first, meaning you're making an offer and it's you can make it non-binding. So you could say, hey, here's an offer, seller, contingent on me being able to get financing. So if they accept that offer, then you go and find a lender and get a term sheet. Now, once you have a letter of intent with the seller signed, you've got a term sheet from a lender, you're going to pick a lender that you want to go into underwriting with. They're probably going to ask you for a good faith deposit to kind of show that you aren't going to just waste the bank's time. Like, they don't want you shopping the deal and underwriting to 10 different banks at the same time, because that's going to waste a lot of people's time. So they're going to ask you for a deposit up front, because you're probably not going to pay 10 different deposits to 10 different banks. So you'll probably pick one, maybe two that you decide to go into underwriting with and start going through that process. Now, underwriting is where you're going to get peppered with a bunch of specific questions. But ultimately, if you come out on the other side of that and get a final approval, then you're moving into the loan closing. Now, one of the things that you're going to get questioned on during the underwriting process is your financial projections and your business plan. And so the spreadsheet that I was showing you earlier is our acquisition projection template. So this, I kind of showed you the first two tabs of what we put together in terms of projections. This is just getting the historical baseline of the company into the model. But then you're also going to have to apply projections going forward. So this could be as simple or complicated as you want to make it, probably. In this case, we just said, hey, this business has been really steady. We think it's just going to grow 3% a year going forward. And then on the expense side, we can go through the expenses line by line and say, hey, this expense is just, it's always been, 0.31% of revenue for bank charges. We think it's going to continue that way. Office expenses have been 1.41%. Meals have been 1.49. Well, we're not going to do meals on the business anymore. And so we set that to 0 now. And so you can go through and make your own assumptions here. We can say, hey, we're going to exclude this. It's a personal expense. We're excluding this as a personal expense, and so on. And ultimately, that's going to create your 5-year projections with the income statement, cash flow statement, balance sheet, and then the income statement, cash flow, and balance sheet broken down by month for each of the 5 years, which is going to meet what the SBA requires. You're going to want to take a close look at, you need to make sure that you're projecting that your debt service coverage ratio is above that 1.25. In addition to the projections, and I guess, by the way, I'll put a link in the description of the video to our acquisition projection template, so you can utilize that as well. And then we've got a acquisition business plan template here. I'm going to show you. So any SBA loan for an acquisition or a startup is going to require you to put together a business plan. And so we've got a free acquisition business plan template here with some examples. You could grab this. We'll put a link. You can see what we did, how we kind of put this together. What are the key segments and sections of the business plan? This one's pretty long, 34 pages. You probably don't need that. It depends on how complicated your acquisition is, but probably for a salon, you probably don't need a 34-page business plan. What you're trying to do here in an acquisition, the business has already been working in theory. And so what you're trying to convey to the lender is, here's my plan on how I'm not going to screw it up. Here's how I'm qualified to be able to take over this business. It's already working, and make sure that it continues to perform well and succeed and be able to repay the loan. I mean, that's at the end of the day what you're trying to convey. And so you need to show that you have a good understanding of the business, show your experience, show a plan to transition it. And, here's like a section on acquisition strategy and rationale. Like, why do you even want to buy this business? What do you think is good about the business? What are you going to change? What are you going to improve upon? Those are all important parts of an acquisition business plan. Projections business plan, that's going to be an important part of kind of once you have that term sheet, but then going into underwriting, you're going to need to provide that to underwriting to get that final approval. If you get a final approval from underwriting, that's where you move into all the crossing the T's, dotting the I's, all the paperwork to just kind of finalize the deal, working with the seller's attorneys and your attorneys and the bank's attorneys. So this is where the attorneys really get involved, going back and forth on the specifics of the acquisition. And typically I would say you should probably plan on 45 days at least from the time that you're approved, kind of officially approved, to closing on an acquisition. That's what I've been seeing. It can happen a lot faster sometimes, but any little thing can throw that off by a week. And so I think just planning on 45 days is probably wise. If it's an acquisition, the SBA is going to require the lender to get an appraisal or evaluation of the business. So this is one more aspect where you could run into some challenges. Perhaps the lender says, yeah, we're willing to lend X amount for this business. But if the appraisal comes in and says, actually, the business is not worth that much. You know, if they said, yeah, we're willing to lend $500,000, but an appraisal comes in and says, this business is only worth $400,000. That's an area where the bank would then have to lower their loan amount. And you're going to have to, if you want to keep the same price, either you renegotiate the price with the seller, or you're going to have to come up with more equity on your own from investors or from your own personal savings to be able to make up that difference. That's the key aspects of kind of the acquisition process, and in particular for a salon. And hopefully your situation, your seller has not, frankly, cheated on their taxes and not reported their cash sales. Because if they have, it's going to make it really tough to get a deal done with SBA for probably the price that the seller really wants to sell it for. So yeah, I hope this has been helpful. If this video has been helpful at all, please give it a thumbs up. Subscribe to the channel. I do a lot of videos on SBA loans, acquisitions, financial modeling. And so it'd be great for you to follow along, and leave me a comment. Let me know if this has been helpful to you, and we'd love to try to help. So again, reminder, in the description of the video below, there's a bunch of links. There's free business plan template. There's the acquisition template. There's the SBA lender finder tool and our free SBA review. So make sure you take advantage of those. And if you have any questions at all, please reach out to support@ProjectionHub.com. Thanks.